Let's turn our attention back to the markets. Let's focus in on the Kenyan market for the day and checking in on how the blue chip index ended. As you can see, a rally there of 0.75%, 4,483 points is where it settled. On the currency front, check in on how the shilling is faring today, 87.6 against the greenback, and you're looking at a slight dollar strength as it stands. Let's cross over to Nairobi to get an update on some of the factors driving Kenyan markets right now. Johnson Nderi, research analyst at Suntra Investment Bank, is standing by. Well, Johnson, good as always to have you with us. Let's talk about market movements on the day. A bounce there of 0.75%. What caught your eye today?
The rally looks like we're back to trend again after a short shallow correction. So again, we can't emphasize enough that we think that the rally has been driven by normalization in interest rates, which is having a positive effect on valuations. So we're just seeing trend picking up from where it left off.
Let's talk about some of the movers on the day, because Safaricom, an interesting one, given the fact that 5.82 million shares supplied in the market and only around 3.8 million demanded. So overall, the stock falling back on the day, adding on to yesterday's losses. What are your thoughts on where the stock price is going to settle and the direction of course, one of the most actively traded stocks on the bourse?
Well, there's clearly some sort of price taking by people who invested earlier on. Remember that the shares rallied about from levels of 3 shillings about 2 months ago. So I think for the investors who've met the hurdle rates, they've probably sold on the rally or selling on the rally, and some of them who probably I've noticed there's a trend that might pick up on the downside, are looking to exit quickly before the stock loses too much. So I think that's the dynamic going on down Safaricom. But I think at some point it will stabilize just at about 5 bob, and we expect it to pick it up again like the rest of the market.
Let's talk about the cement sector, because Athi River Mining rallied today 7.6% on the day, settling at 56 shillings 50 cents. What are your thoughts right now on the prospects for the cement maker? Of course, they have been investing in increasing capacity. They recently had that share split, a stock of 5 for 1 share, and we saw a bounce in that stock post the share split. But what are your thoughts fundamentally on the prospects for Athi River Mining?
Fundamentally, I think the company is in solid ground. It's very likely that East Africa in general will be a growth hub. If you look at our cement consumption per capita, it's still way below what it ought to be. So we think there's quite a bit of pent-up demand. And taking into account that when interest rates rallied last year, to the beginning of last year, there was quite a bit of pullback in construction building. We're seeing that is down as interest rates now stabilize to probably what one may call the long-term means. So we think there's some sort of recovery in the building and construction sector following last year's slowdown. So it makes a lot of sense for Athi River. From the demand perspective, I think there's quite a bit of demand of cement in the region.
But from the cost side of the company, of course, costs are always a big factor for cement makers. How efficient do you rate the company is right now? And do you think that they're doing as well as they could on the cost side in managing costs?
Well, cost is going to be very difficult in East Africa, largely because you've seen the inflation rates go wild just the other day, and the shilling slide again the last 2, 3, 4 weeks. Again has brought back memories of the last time when the shilling slid all the way to 107. So you can imagine the challenge it is for manufacturers trying to manage their costs. Nevertheless, they've done some things on site because they have been able to, for some, convert to coal coal energy, and other innovations that will help them manage the costs. But on the general side, I don't think cost at this point is such a big concern, because they've got advantages over any other competitor who would want to come in the market. Number one, they've got a good distribution network. And secondly, in any case, there's quite a bit of demand, so most likely any new segment that will be coming online will be fully absorbed. So I think they can rest easy for now.
Also, strong bounce in housing finances stock today, up 2.5% to 18 shillings, and signing that $20 million loan agreement with the IFC, and that, of course, to facilitate green housing. What are your thoughts on kind of the demand for this? Of course, that would also be seen as a little bit more expensive, or is it? I suppose that's a question. And do you think that the market likes the opportunity that this presents to housing finance?
Well, with Kenya's housing market is a bit tricky. Again, if it were me, if you're pursuing a green energy or green development option, I think you might want to do it in the middle and upper middle income scale, because of demand dynamics. And there's the thing about Kenya is that there are a lot of numbers being peddled around, with regards to demand for housing. My chief concern is demand as opposed to effective demand. That is, people who are willing and able to pay. It's very easy to go above the effective demand, and therefore effectively having oversupplied the market. So that would probably be a concern, but I suspect they've done their homework. Maybe there's demand from where they sit, so there's a good chance that they could actually get to make some sales and make a good return on that money.